I do come from, I guess, a slightly different angle myself at the moment. He talked about going direct to investors. That's probably where I've sat myself at the moment, and just a couple of things I sort of do to do that. One is just doing your homework and really knowing who investors are out there, understanding their story, so that by the time you spend your time with them, they're figuring out your story. And I guess from my perspective, I think it's a really important way of showing to them that you always do your homework. It means you do your homework for your competition, you understand your market segments. It shows that you're already forward-looking and thinking about what's happening in the market. And the second, which haven't necessarily done really well, but word of mouth, rules. So try and be visible in their network somewhere. So I guess the most recent investor I've got on board is Rod Drury. And approaching him, I sort of made sure I'd done a whole lot of things leading up to getting him on board. Although in the end the deal was done very, very quickly, and I'll outline that soon. I suppose from my perspective it took me about 3.5 years to get to the point where I was really attractive and could sit down and do that sort of a deal. So for me, being visible is really important. So I know a bunch of people that he knew as well. So by the time we start circulating myself and ideas that I'm circulating around the network, people start prepping up and understanding what's happening. I'm just going to go through two things here. One is, I guess, the engagement process and how I've sort of gone through that, and then, I guess, doing an actual deal. In terms of engaging, I see investors looking at relationship test 1. Your business is all about relationships and your ability to secure customers, find partnerships, and work to grow and develop a business. So stage 1 with an investor, they're really finding out, are you the sort of person who can do that? So they're the ultimate test. They're going to be a customer, they're going to be a partner, they're going to be a potential investor all in one, and they're evaluating on all those bases. So not just sitting there thinking about, will you get a return on my investment, they've gone next step ahead and thought, to get a return, you're going to have to be a great relationship person. So I'm going to hear a whole lot of ideas, hopefully going to be really inspired by you, but what's really come through loud and clear is that you know how to manage relationships, you know how to build one, you know how to engage. So use that first one as a test to see if you are a business development sort of a person. The second would be being capital independent, and this is a really difficult one because quite often by the time you get to an investor you need money. Obviously try and avoid that situation. If you're forecasting ahead, try and find your funding shortfalls when they're going to occur and start the investment process very, very early. As Tim said, a 9-month lead time on doing a deal, that can be obviously a breaker. Unless you've got some really, really substantial cash flow in your company, you will just fall over. So in terms of being capital independent, the biggest things I would have done is built up a services company over a few years. So by the time I came to build a new product and a new idea, I had an existing cash flow positive company sitting there the entire time. So the signal that sends to an investor is not that you don't want their money, because they already know you want their money, there's no argument there, but it says basically, look, if you don't give me the money, I'm going to do it another way. And that's really quite important. And investors actually like that a lot, obviously, because they're looking for investments, they do want to give their money over, but for them, they don't really want to be the ones carrying all the risk. And you're just basically saying, look, I'll take back all the risk, in the end I'm going to do this on a freight train, moving in one direction, basically come on for the ride. And although they may end up coming on, jumping at the front of the train and being your chairman and really backing and pushing you, they want to know that you're doing that anyway without them. So sort of show that level of confidence. Particularly a two-way street. You want to get into a situation as soon as possible where they need you and you need them. It's very difficult if you get in a situation where they know you need money, and again, I'm not really, I guess when I say they and you, I don't really want to sort of draw everyone apart. I guess an investor is about to be someone who's in your business in a very short period of time, and they'll become, as a result, your friend, a business partner, someone you're very close to. So I guess straight away you want to get to any relationship you hold, personal relationships, they're two-way streets. So try and get that as soon as possible. Don't just hound them. Try and put really compelling things out there that make them want to come back to you as well. And they'll appreciate that because they want to be out there hungry, coming back to you. That's a really good, healthy sign. You're probably onto something quite good. So in terms of, I'll outline a couple of things I've done through that later, but I guess every time I finish the first engagement meeting, make sure there's something you've said to them that they're going to have to go and find out about and come back to you to confirm and validate. And then straight away you've got a bit of a hook there because you've already got enough hooks to go back to them, just trying to constantly plant a few to come to you. By the way, I haven't necessarily done all this really calculated, I'm sort of just debriefing on what I did afterwards really. Independent validation. They always want to try and go out their network and figure out what you're talking about is getting talked about by somebody else. So, to give you a quick example with planhq. I guess we're a business planning product trying to help you execute a strategy. So you actually deliver a really profitable business over time. So when it came to validation, I guess I talked about a couple of things to Rod really initially. And he said, look, there's I guess the business growth market, and the escalator program is a good example of that, is really taking off at the moment because people are understanding, especially in New Zealand, to grow our economy right now, to have a solid capital base outside of real estate, we need businesses. So this whole market is really, really moving. This is just to validate the New Zealand opportunity. I guess this product is very much an international business, without a doubt. But the New Zealand opportunity, I know we can validate it very quickly, within 24, 48 hours. So I said, I guess at the moment you've got a lot of people who are running these organisations, constantly getting business plans. Tim screens 350 plans a year with 2 people. Straight away to me, that just rings a big bell saying, make this process more efficient, make it so you have standardised data coming through from companies, and enable you to screen businesses a lot quicker and more efficiently. Because I mean, if you're an investor combing through investment propositions, you're looking for the ones that stand out with a bright light on them. And I mean, Tim, you must drop tens and tens very early on. And I know that every investor I've talked to do the same thing. They just constantly have to see the bright light sticking out. So I guess what planhq is there for is for the companies who want to be that bright light and say, look, I don't want to be a 10-page wordy document. What I want to be is a living, breathing business plan, something which I'm achieving, something which I'm tracking and making happen. So in terms of this, what I did is basically said, look, I think the government's going to be very keen to do a deal here with planhq. And while this is very early days, Rod's on the board of advisors for the B-Share program with Trade and Enterprise. So he had a meeting within a couple of days, goes up there, circulates the idea really quickly, and rings up the phone, and I'm holding the phone about half a metre back. He's screaming at me, telling me how excited he is, that it's really taken everyone into this idea at the moment, and it's really a big part of the market. Straight away, that external validation got me the phone call on, which is a pumped up potential investor. But secondly, for him now, it's his business, and he can run with it, and he already understands all these issues. I mean, planning is not something that's unfamiliar to an investor and an entrepreneur or a guru. He would think about these things all the time. But in the end, he's got zero. He's got a primary company he's trying to drive, and the best you can do now is fit into the portfolio, and provide a business he understands really well and can plug into. So try and give him something to validate it outside of yourself. Show balance, and I guess this is probably the big one, and it got touched on by Jeff and Tim. I guess, investors do love ideas, people, and ideas definitely make the world go round. I've no doubt about that at all. Everything I do in the business is driven by ideas, but they don't really finish the job. It's all about execution. And I guess, investors are constantly going to sit there in a 10-minute conversation and think, yep, pumped up person, really knows their stuff, totally got a solid background, great ideas, really has a big global opportunity in mind. That's outstanding, but are they going to be able to execute this? Are they refined? Are they going to focus on numbers as well and structured data, things that can actually ground the business and ground the thinking? So just a really quick screenshot, but I'll take into its own. I guess be quite calculated and precise as well. So go from do it in the same conversation, within 10 minutes of really pumping up and blowing the idea and getting their excitement, drop straight back down to break-even point. Start talking about the amount of months it might take you to break even and why that's going to be the case. Start talking about the first key segments in the market that you're looking at addressing. When you talk about your competition, understand them. Provide some really key facts right now that you know already. Show that you're calculated at the same time. Because the ideas person and the calculated person together is what make a really successful business. And one without the other is very dangerous. And I guess most of what we're seeing in the market at the moment, from what I'm hearing from people like Tim and a lot of these investors, that there's too many ideas out there. And there are a lot of ideas, but ideas are not businesses, and they're certainly not profitable, successful businesses. So turn it into a business as quick as possible. Frame it as a business. So a business has a passionate leader without a doubt, and a lot of people in this room are probably those people. It's fantastic. You've got to hold on to that, and that's what's going to keep you going. It means you're going to attract the right people. But when it comes to the business, which is to me going to provide the cash, it's going to get you investment. Keep a big focus on it. In terms of doing a deal, I guess I say leverage is queen, and I really mean this because I guess investors are people that do deals, and they're very smart, savvy business people, which is why you want them as an investor in your business, for exactly those reasons. So from their perspective, they're constantly going to try and get a really good deal, not try and screw you, because that's the sort of person they are, and it's really positive. You're about to leverage that, in your own business very soon. Because having someone who's a great negotiator pushing you down while they're trying to get an investment deal is going to be on your side once you do that deal. So have some leverage. Make sure that when you come to doing a deal, this is not the only option you've got for capital. So this is what happens in a typical investment process. You might pot up and go down the path with one or two, and if it gets down to one quite early on, be very cautious that you haven't got other options sitting there available, because as the deal starts going down, you've always heard of the 11th hour, I'll touch on it in a moment, it gets narrower and narrower, all your information is exposed, you're totally transparent now, and then you realise, and they learn too, you're the only option you've got. You really don't want that to be the situation for anyone's sake. You want to know that you've got leverage. Think about it from their perspective too. If you're in the marketplace, going out there, if you put all your eggs in one foreign market, if I said, look, the US market's going to be my biggest market, not even going to look at the rest of the world, all my eggs in one basket, if it doesn't quite work, I'm very exposed. Same with investment. Keep the options open. One of them hopefully will come through, but let's try and do that as much as possible.